Average home prices jumped over $50,000 last month. Meanwhile, inventory hit an all new low. Hey everyone, welcome back. Vancouver Life Real Estate Podcast and YouTube channel. Today, Ryan and I are going over the October numbers with you, diving into exactly what they mean and sort of what's happening, and of course, what to expect next. So we are going to start today with the sales volumes. We saw just under about 3,500 homes sell last month, and this is about a 5.2% decrease from October of 2020, but the main story there, I guess, is we saw an 11% increase in home sales over the previous month, over September.
What?
Yeah. It's a huge jump and one not normally seen in October. October historically is kind of when things start to slow down sales volumes wise, and we're seeing the exact opposite happening right now. And of course, we're still extremely elevated in home sales, so much so that we saw about a 22.5% more sales than the October 10-year average. So things are super high still overall. Sales volumes have increased in the last 2 months in a row, and 11% that we just talked about, that's the second largest jump in home sales that we've seen for the whole year. So it's something very unique is happening right now to see that much of a home sales increase in 1 month. We know how spectacular sales have been for all of 2021 here. So to have October be the highest jump in sales percentage is a big story here that we're kind of wanting to share with people. And lastly, only 7 of the last 48 months saw higher volumes
Oh my goodness.
than October. So if you go back, we're talking about 4 years. You go back 4 years, only 7 months had more sales volume than we saw last month.
Dan, do you have any idea why this might be the case?
It is still an environment of very low interest rates, but with the threat of that changing. So when we're seeing the fixed rate go up by about 70 basis points last month alone, it's sort of like people are like, well, that's it. Things are going up. We get in now or we don't.
Mm.
And I think it's sort of that last hurrah. And don't forget too, we also saw extreme amounts of new mortgage applications in the last 2 to 3 months. So of course, what's happened is those mortgage applications that we saw happening then, they're now turning into home purchases.
They're
So
converting.
it's not too unexpected when, the data was there 2, 3 months ago that this was it's essentially inevitable.
Mm.
But happening in such a low inventory environment, it's wild to see people just kind of picking up everything and anything they can right now.
Yeah, it's kind of picking up whatever's left.
It does
And
feel like that. And sorry, just one last thought here
yeah,
that
yeah.
just hit is, of course, we've shared a few stories recently about people tapping into their home equity to help buy either that second home, which is the number one leading new mortgage. 25% of new mortgages are for people buying a second property. And of course, people are sharing their wealth with their family, with their kids. They're helping kids get in. And so as home prices become higher and higher every single month on average, people are tapping into that equity more and more to get into the market because, as we've seen for 18 months now, prices only go up, which is not the truth, but that's the sentiment that people are feeling.
Mm. Interesting. Okay. Well, let's look at new listings because that's sales are part of the story. New listings are an interesting indicator as to what's coming in the market. And unfortunately, October saw its lowest new listing production in 5 years, with 4,049 new homes listed for the month of October. This is actually a 27.3% decrease compared to October last year, and a 21.7% decrease compared to just September of 2021. Wow. And then you combine that with home sales that are up 11% from last month, with new listings down 22% from last month. You've got a bit of a bloodbath storm. Well, I can't say the word I want to, but it's not a good scenario for any kind of buyer at the moment. It's a very, very difficult time. And it's all over the region too. I mean, we've got people in Squamish all the way out to Langley, Maple Ridge. It's all over the map. It's not located in any one particular area, right? And I think that we just don't have the inventory, and I think that's probably where we should go next.
It's normally for our buyers, every week we see X amount of homes that hit the market that meet their criteria, and then we go and see the best of those lot. And we have this conversation almost every week, like, okay, nothing really good hit this week. We're going to check out, see the market next week. And the selection for buyers right now, it seems just to get smaller and smaller and smaller every week. A year ago, 6 months ago, even, you'd see 5-6 listings per client per week hit the market that fit their criteria. Now, you're fortunate if you see one, maybe two. It's just tight.
I gotta say, like we had this listing up in Squamish, and in the town of Dentville, which is up in Squamish, in the last month, in terms of single family homes, there were 3.
Great example. So then, let's talk inventory. Inventory active listings right now sits at just over 8,000, about 8,034. This is about a 35% decrease from last October. But the biggest story here, we saw a 13% decrease in overall inventory just last month.
Whoa.
1 month decrease of 13%. And this is coming off of already low lows. This 13% is by far the biggest decrease we've seen on a percentage base for the whole year.
Yeah.
The appetite is ferocious now. People are, like we just mentioned, kind of picking up anything and everything. And as a result here, we've got the lowest October inventory on record.
I do want to say, because I think it is important to say, normally we see a decrease in inventory this time of year, but we typically see like a 3 to 5, maybe a 7% decrease. 13 is asinine. That's a humongous number, right? And this is due in part too to the fact that, potential sellers are looking at the marketplace going, sweet, I can get a hell of a number for my place, but then what am I going to buy? Right? So if there's nothing really to buy, or no motivation to buy anything because that you're going into a very, very heated storm, a lot of people will just sit on their property until the environment gets a bit better, right? I think that that's a big part of our issue. They've got nowhere to go, nowhere new to go, right? So people will sit on their inventory or sit on the market's inventory until there is a place to go. And that's just going to continue making this harder for buyers. And honestly, those transition, right? Going from a smaller place to a bigger place. Anyhow, let's touch on the sales to active ratio. This is my favorite. It talks about the sentiment of the market. And overall, we're looking at a 43.5% seller's market. That is bananas. That's the third highest we've seen in 4 years. After 2 of those months were this year. That's March and April of this year, right? So you have to go back to May of 2017 to see this kind of sales to active ratio for sellers. So this is the 3rd month of this ratio increasing after lowering for 4 months, right? So it's gone, whoop, it bounced hard is the way I would describe that, right? We've seen a steady climb since January of 2019. And so what does this mean by asset class, right? So we've got a 33.6% seller's market for detached homes. I think, Dan, mark me if I'm wrong, but wasn't that at like 26% last month? I think that's a pretty steep jump north back.
We could pull it, but that is a jump.
I think that's a pretty significant jump. And I think I remember townhomes being in the mid 50s. They're now in the mid 60s.
Okay, so detached was 23% last month.
So it's jumped 10%. Yeah. And then townhomes, I think, was something similar. I think it's jumped another 10%. And I wouldn't be surprised if apartments are the same. So detached, 33.6% seller's market. Townhomes, a staggering 64.5%. That's just crazy. And apartments are thriving at 46.5% as well. Big seller market numbers.
Yeah, we saw, I mean, overall that ratio jumped 9% last month for all properties. And I think, Ryan, one of the main reasons this is your favorite indicator is because it's so indicative of what happens with prices.
Mm-hmm.
So you go back 3 years now is when the sort of the last cycle of the sales to active listings ratio kind of bottomed out, if you will, and it's been an almost sustained upward line of this graph ever since then. And also, what has also gone up during that exact same time frame are prices.
Yeah.
You can't have a sustained upward trajectory of sales to active listings ratio without prices following.
Mm-hmm.
And the ratio has been in the seller's market for over 2 years now, and prices have been going up for 2 years now. Yeah, sure, there was a little dip for 2 months while the country shut down, but outside of that, you're looking at an almost straight line up that follows prices almost verbatim.
So let's talk price then. Where are we at?
For sure. So prices, HPI, the home price index just hit $1,199,400. Essentially, the average home is $1.2 million here in GVRD. And yes, that is a new all-time high for that price indicator. We're up just under 15% from this time last year and 1.1% from last month. And if you remember last month's edition here, we were 0.9% last month. So 2% increase in property prices in 2 months. The rate of appreciation has slowed, but the fact that we're on a trajectory of a 12% annualized is still huge. It's a big, big number.
To give you guys some perspective, it should be about half of that for sustainability.
Yeah, even 3%.
Yeah.
It's kind of hovering just above inflation sort of thing, is what we see happen in normal markets, if you will.
Which we haven't seen in
Canada.
like a decade.
Yeah. So I want to point out something too about the HPI price here. Important to note that the last 8 months in a row, every single month was a new all-time high.
For HPI.
Mm-hmm.
Wow.
We've seen almost a straight increase in prices since the bottom of the recent cycle, which happened in September of 2019, is when HPI price stopped its last trend of going downwards and has gone up. So we're talking just over 2 years here. During that 2 years, HPI has gone up $213,000.
What? So if you owned your home, theoretically speaking, you made $100,000 a year, sitting in $107,000 a year just by living in your house. And tax-free.
Correct.
Assuming that's your primary residence. But my goodness.
No wonder people are feeling house rich and buying more homes with their homes.
Well, yeah. I mean, if it's up $213,000, I mean, you can take 60, 70% of the equity gains that you've made on your home and use that as your down payment with a new mortgage. Or it's no wonder 25% of people buying more homes are those that have made money in it, right?
Mm-hmm. Yes.
Smart money. Smart money.
Yeah, exactly. Okay, but we also, we look at all three price indicators to give a big picture example of what's happening here. So HPI, all-time high today. What's the median doing? Well, median just hit 899,900. That is the second month in a row that the median price has gone up and is the third all-time highest median price outside of March and April. For reference here too, bigger picture, it was only 5 years ago, October of 2016, where the median price was $610,000.
Oh my God.
So in that time, in 5 years, we have seen a 48% increase in the median price. I mean, we're talking 10% a year, almost 9.5% per year. It's gone up.
Wow.
And, as detached is kind of a big indicator here, it is important to also note the median price for detached just hit a brand new all-time high, $1,755,000. That beat out the previous all-time high that we saw in April of 1.7. So we're $55,000 above the all-time high for detached home median prices today. And then lastly, we've got the average price. Yeah, I know.
I kind of don't know what to say.
Right. Every week we're saying numbers that are baffling us.
Well, they don't seem to. When you look at like historical market trends and things like that, and you look at cycles, this is just outside of those cycle ranges. It just it's probably exacerbated by all-time low rates, very, very high immigration, and low inventory and no stock. But it's a storm that is, it's really causing issues in terms of affordability. I mean, we have clients that are professional doctors that are leaving the city because it's too expensive. They're going east or they're going south. It's just it's crazy. It's a big problem. It's going to get worse.
Yeah. And so lastly, we'll talk about average prices. That's the third method that we do track property prices here. Average prices overall jumped $51,000 last month, hitting a brand new all-time high of $1,226,000. This is beating out the previous all-time high that we recorded back in April by $14,000. So here we go. Yeah.
Wow.
Yeah. Massive numbers. So 2 of the 3 price metrics hit all-time highs last month. Detached hit all-time highs for all 3 metrics last month.
So let me break that down a little bit then. So for all 3 asset classes here, we'll start with detached, right? So as of last month, there were 1,090 sales in the detached market. That's an 18.4% decrease from October of last year. That's a price point now of 1.85 million. This represents a 20.5% increase from October of 2020 and a 1.2% increase compared to just last month. So you would have made $18,500. Now at 1.2, probably $22,000, $23,000 by living in your house last month. That's crazy. It's crazy. Condo sales were at 1,801 with a 14.7% increase compared to October of last year. Prices are now $746,400. That is a 9.5% increase from October of last year and a 1.1% increase compared to last month. Townhomes, a mere 603 sold. I'm sure we could put 1,603 if we actually had them. That being said, that's a 22.9% decrease compared to October of last year. Prices are now a staggering $975,000 for your townhome, and that is an 18.5% increase from October of 2020 and in line with another 1.2% increase compared to last month. Holy cow.
Yeah, we can see where the interest is, and it's across the board, but we see where it's accentuating here too.
Mm-hmm.
So something that we haven't done in a while, but wanted to bring back here is the percent of asking sale price to sold price. People ask X for their property, and what does it sell for? We are seeing average homes sell for 100.4% of their asking price. What does that mean? It means there's a list price, and it means on average, everything is selling above that price. Things are selling over ask. And the way that they get there, of course, is by multiple offers, generally, meaning that understandably with record low inventory and increased sales, there's a lot of people that are interested in the same property, and that's what results in multiple offers. Things get emotional, things get heated, prices get bid up, and then we see it in the charts here where average prices are selling above asking price, just only a little bit, but again, that is above. This was the case for 7 out of 10 months this year in 2021.
Cow.
7 of 10 months in 2021 saw the average sale price above asking. We haven't seen these kind of numbers since March of 2018. So we're talking 3.5 years ago. We haven't seen this kind of environment.
Wow. Jeez.
Yeah. Understandably too, days on market is low, 11. It takes 11 days to sell a home in Vancouver right now on average. That is the same as last month. And overall, it is low. You know, we've seen that kind of sustain for about a year and a half or so. But prior to that, it was up in, the 20s.
Mm.
So what's going to happen next? I'm only laughing because we've been coming on here for a year plus now, and every time we talk, every time we do stats, it's record price, new record price, new record price. It's not sustainable. Things are changing. So what is going to slow this down? What's going to happen next? We are seeing fixed interest rates climbing, and they are climbing quick. Like we mentioned earlier, we've seen about 70 basis point increase just last month. So your fixed rates are now almost a full basis point
Yeah.
or percent rather away from variable. So variable you can get in today 1.25 ish, whereas your fixed is about 2.25. Understandably, that's pushing people to variable rates.
Mm-hmm.
About 55%, I believe, is the number now of people that are getting new mortgages are going variable. That fixed rate too, for reference, at 2.25 is sitting right around where we were pre-pandemic. That was the rate people were getting pre-pandemic. And yes, prices were still rising then as well. So
Wow.
how much higher will they go, and how many people will, opt for the quote unquote cheaper option, and for how long?
Yeah, I mean, when you've got the Bank of Canada coming out and saying, "Hey, look, by Q2 of 2022, and probably early Q2 2022, based on the fact that we are seeing quite a number of, well, we just don't have any more inventory, right? So people are going to rush to get their mortgages, whatever they can. They're going to button those in. We're going to start to see these rates rise. And as we do, there's going to be a rush to buy product, a rush to lock in that last cheap mortgage rate before interest rates begin to march up. They have to come up, guys. They cannot stay this low in an environment where, I mean, our interest rates are so low that the real interest rate is probably in a negative position, right? And that's something that is costing the government and the banks money to loan, right? They know it's coming back in the years to come, but interest rates have to come up in order for our economy to remain sustainable. We've seen inflation at nearly 5%. I think that that has to come down. We'll see how transitory some of that inflation is in the coming months. But I think that there's supply chain issues. There's a lot of things that are going to be exacerbating and are going to make it difficult on the economy. So there's some change coming. I can see it.
Yeah, it's interesting because we've been running over the 2% target inflation for what, 6 months now, 7 months. And the Bank of Canada came out last month and said we're not raising rates for at least another 6 months. That's new. That's not what we've seen historically. I mean, as soon as as soon as inflation got hot historically, okay, BOC comes in and raises interest rates to try to quell that. And right now they're saying we know it's hot and we're going to let it run hot. And I think part of the reason they're doing that is because, yes, of course they know rising interest rates would slow the housing market, but the government is attached to it, their debt's attached to it, big corporations rather, debts are attached to that rate, and they can't increase it to a point where they're going to bankrupt themselves. So
Yeah.
they've kind of painted themselves into a corner here where, yes, inflation's high. Yes, they technically want to raise rates for that reason, but they can't shoot themselves in the foot on the other side of that. So it's going to be very interesting to see how this all unfolds because it is unknown right now. I feel like we're in uncharted territory. And yeah, I mean, sure, rates are going to go up. And let's remember too, though, the last time rates went up, they went up, three hikes?
Mm-hmm.
Three to six hikes, I think, and things started to explode. And they said, "Oh," and they pushed them right back down again.
Yeah.
They just tried to dabble in increases, and the economy said no, and they had to lower them right away. So just because they raise one or two next year, maybe there's nothing stopping them from going the other way too.
Mm-hmm. Yeah.
We don't
Yeah.
know. We don't know, but we know what we've seen historically. And if the country starts to shut down because interest rates are too high, they don't have an option but to put them back down.
So let's talk about the things we do know, right? I mean, we do know that immigration numbers are at all-time highs. We do know that housing stock are at all-time lows. We do know that there is an insatiable appetite for hiring right now. We know that businesses are looking for people to get going. We know that people don't necessarily want to go to work too. That's the other side of it too, which is very interesting. And when you put these factors in, I think at a base level, a fundamental level for housing anyhow, I don't think you're going to see too much in the way of it on the downward side of things, short of immigration falling off. If immigration goes away, then yeah, But that being said, all of this growth has happened with the vast majority of the time with our borders closed, right? This is a lot of domestic demand. And we've known that domestic demand to be here for some time. And now, as we continue to grow the population base, and that population base continues to feed into places, the major urban centers like Montreal, Toronto, Vancouver, and we're starting to see places like Edmonton and Calgary perk up too, just because of affordability, right? Places like Halifax perking up because of affordability, PEI, right? You've got people going east because of affordability, right? So I think, over the long run, home ownership is definitely still something that you'll want to be involved in. It's your key to retirement, at least in this country, in my opinion.
I think with the sales ratio at 45%, you cannot expect to see prices to lower in that environment, along with everything else that Ryan just mentioned. I think we're looking at continued swing and upward price pressure through till at least March right now. Just all the metrics point that way. There's no data that says it's not going to continue. When the data changes, of course, we're going to let you know. And of course, we're going to change the outlook and the vision. But the forecast today, based on all the data that exists, says prices are going to continue to push upwards.
Okay, guys. Well, we can't beat it to death. Prices are going up. Inventory's down. We'll see what next month brings, but it would be nice to see maybe some of these levels come down just a little bit more tapered. It's pretty strong numbers. So anyhow, guys, thanks again for listening, and we'll catch you again next week.